Good morning, everybody. What a beautiful day it is in the capital city of London. Sun is shining. There's a ceasefire for now. Depends on when you listen to this, if it's holding. Do I think it's going to last 2 weeks? No, I don't, but more on that later. This is the Morning Blast with myself, Ryan, and of course, Michael. Very, very, very candid market-related podcast. Nothing we say on this is trading investment advice. We don't apologise for rants and tangents and indeed foul language that we partake with on the show. Michael, how the devil are you?
Yeah, very good morning to you, Ryan. Good morning, everyone. As you said, it is a lovely day outside here in the city of London. I must admit, I am rather knackered this morning. I went to bed at about 1 a.m., not because of any sort of drunken rampage that I was on, but simply because President Trump decided to leave it so late to deliver this extension, ceasefire, can kick, taco moment, culmination of the art of the deal, whatever the hell you want to call it.
Escalate.
Yes, exactly. But no, other than that, I'm all right.
Well, I can tell you now, I was sound asleep because I thought, you know what will be, will be. Also, I'm just having some mental images of you being on a drunken rampage, like throwing your penny farthing bike into the river and.
Well, I thought you were going to say throwing a pint, but I do that sober. So
Drop/throw. Yeah, quite very, very, very apt. Before we crack on with the fundamental news and the macro news, speaking of Clive Lambert, bless him, he's trying to get all macro and technical and he's trying to get all macro and fundamental with us on WhatsApp. It's so cute to see him talking about non-technicals.
To be fair to him, he also did say, and I quote here, "I know you will both say that charts are useless at that point." And do you know what, Clive? Yes, I will say that.
Well,
I think they are this morning.
Do you know what, though? I didn't want to say this to him on his own on WhatsApp, and we'll just hear us because I don't want to make him, get big head. But if there was any moment when I'm going to be looking at your 200-day moving averages and all of this stuff, like, the bigger the more fundamental of the technical levels, if you know what I mean. Today's the kind of day where I'll be looking at something like that.
That is a fair point, but also like I said yesterday afternoon, there were only two people who knew with certainty what was going to happen. The first was, of course, President Trump, and the second was the Elliott Wave folk.
Well, and I reckon the Elliott Wave folk probably knew before Trump.
Well, probably. We're in wave 8/A/Z of some astrological formation at this point, I assume.
Yeah, no, it's all about Uranus. But anyway, speaking of Uranus,
now we're talking your evening.
What, Uranus? I was thinking of Uranus.
No, fucking hell. I'm going to read out Clive's roundup in a second.
Let's go over to Clive Lambert over at Futures Techs, our dear friend. S&P, so obviously there's a lot of moves overnight on the news. S&P up above 8, as we remember, people, this is as we've gone to print. This could all change in the next 10 minutes.
This is 8:30 London time on Wednesday morning, just a timestamp.
And Clive wrote this about half hour ago, so it could be already out of date, to be honest. S&P up above 6,800 as Clive went to print. 6,888 is the next resistance and target. NASDAQ through 25,055, testing big resistance at 25,200 to 250. DAX 24,424 is the high overnight as Clive went to print, so above the resistance at 24,150. Gap support is 23,590. FTSE 10,526 and a half is gap support. 10,920 is the all-time high, so just levels to be aware of. Bund futures also gapped up. 125.73 is gap support. 126.26 is the Fibonacci level that we're currently above. In the T-notes, they're above the 111.14 level that we've been watching and commenting on recently, so that's a key point for them. Eurodollar rallied to 117.08 and is currently above 116.69, a Fibonacci level, and the 200-day simple moving average. So one to keep an eye on there. Cable also bid and also retesting its 200-day simple moving average. That comes in at 134.13. Bitcoin got up to 72,762 overnight. Metals all higher. Gold topped at 4,888 overnight. Silver, as Clive went to print, was around 77.50. London copper, that gapped up pleasingly. Thank God for that. Small on. 12,471 is gap support. This means that we're above the downtrend line that has been defining things of late. Thank God for that. Brent, obviously, if you've been long crude, overnight has not been pretty for you. Brent crude printed 91.70 in early trade, coinciding with a Fibonacci level at 91.66. Below that, we have $91. We look for 79.02 next, technically on the downside. Obviously, oil more than anything, energy more than anything else is subject to headline risk. WTI is below a short-term uptrend line on the daily chart at 97.30, but above the Fibonacci support at 93.92 after printing 91.05 in early overnight trade. Gas oil, obviously European kind of thing, European diesel prices basically, has pulled back to support around 1,100. European gas TTF has gapped down and is currently trading below 46.53, a Fibonacci that we've been watching of late. European carbon markets opened with a bid, but sellers are responding already. Corn and wheat are both offered 448.2 as gap resistance in corn, but soybeans have staged a solid recovery from an overnight low of 1,140.4. Also, quick question for the floor if anyone's in the live chat and wants to help me out. Someone tell me why Rolls-Royce has rallied 10%. The reason I'm asking is because I bought some yesterday and things like this don't normally happen for me, so I'm a bit worried.
I'm going to guess something along the lines of travel recovery, airlines picking up on the back of the ceasefire, etc., etc., etc.
I did see some buyback news as well, so whether or not something like that's gone through and someone's...
I don't want to, talk to people like they're morons, but just to lay the point, Rolls-Royce do not make cars.
Oh, no, God,
They
no.
make jet engines.
Do you know what?
Military equipment.
Once every couple of months, I reckon, between us, because every time either of us see it, we always flag it to each other. But once every couple of months on Twitter, you will see some expert quote about Rolls-Royce. And they'll comment on the cars. And you're like, guys, show me you don't know what you're talking about without showing me you don't know what you're talking about.
Yeah, exactly that. Anyway, thank you to Clive, as always. One thing I would say, just before we get on to the kind of meat of what's going on in the Middle East and all the rest of it, is that actually, if you kind of digest all of the market moves that we've seen this morning, they actually make complete sense. Obviously, sorry?
For once.
Yeah, exactly. Yeah, you've obviously got crude lower as the market is essentially getting its hopes up that supply conditions are going to ease and that Hormuz is going to normalize. If you look at the equity space, yes, you've got a risk rally, across the board, a bit of a sea of green going on, but it's the energy importers that are outperforming, which again makes sense. You look at the leading stocks in Europe this morning, the FTSE 250 is up 4.5%, the DAX is up 5.5%, the UK and Germany are big energy importers. The Nikkei was the outperformer in Asia, again, reflecting that theme. In the FX space, you see that coming through as well. Those economies and currencies that are vulnerable to an energy shock are the ones that are leading the way higher this morning. And in the fixed income market, again, it's that story plus the laggards or those that have really lagged the pack in terms of the sell-off that we've seen. I'm thinking about gilts in particular, are the benchmarks that are outperforming this morning. The 5 and 10-year gilt down by about 20 basis points apiece. So it's somewhat reassuring, I think, that the moves that we're seeing are logical, and it also implies that we are potentially, I don't want to get ahead of ourselves here, but potentially getting away from this market where all correlations were at one, effectively. Everything is basically going where Brent crude tells it to go, and some degree of rational thinking might just be coming back into the mix a little bit.
Yeah, no, absolutely that. I think before we do crack on, because obviously there's, the old Taco Tuesday delivered again. One thing that I want to caveat, and I think, Michael, you'll back me up on this, there's going to be a lot of talk of this 2 week ceasefire, etc., or whatever, what we're talking, 2 weeks, 10 days, whatever we talk about now. But let's frame it correctly. Do I personally think this ceasefire is going to last 2 weeks? Do I fuck?
That's for anyone not from the UK. That's a polite way of saying no, he doesn't.
No, I don't. No, not a fucking chance. Do I think that the world is now right again, and even if ships start flowing at full pace through the strait, that the energy situation and all this is going to be fixed? No, I fucking don't. It's one thing, helping the backlog out, but there's a lot of gas and oil and whatnot and product locked in. This isn't just turning on a tap, big old spindle that's spinning around, also everything flows. There's still a lot of work that needs to be done to facilities that have been hit, specifically on your LNG front with Qatar Energy, etc. this is far, far from over. Has it given a huge a huge lift to Trump's friends' stock portfolios? Yes, it has. Is that probably
and ours?
And ours. Yeah, thank you very much, Mr. Trump. I did say a massive smile on my face, by the way, but yeah, there we go. But yeah, I think we need to all just understand what the limitations of this are. Things aren't just magically back to normal.
No, I think you're right. And I think the market reaction that we've seen today is pretty much what you would expect. It's more of a relief rally, for want of a better word, where the market is pricing out the risk of material escalation, at least in the short term, and effectively going, thank God Trump didn't follow through on his threat yesterday to, wipe out an entire civilization and all the rest of it. And, the direction of travel is towards some sort of deal being done and away from, ramping up the threats in terms of military action. It's not to say that the direction of travel is going to stay in that direction, but that's what markets are pricing this morning. And I actually put this out on Twitter earlier. I think we try and do this every morning, but it's very important at a time like this to remember that there's going to be a lot of noise doing the rounds, whether it be on, television, on the internet, whatever. Everyone wants a hot take. Everyone wants an opinion. And more importantly than that, every side involved in the conflict is going to try and claim that they're the ones who are winning because they want to save face ultimately, whether that be Trump, Iran, the Israelis, whoever. I think from a market perspective, the focus, if you are trading, needs to remain solely on what I would say that is the direction of travel ultimately. Are we moving towards or away from a peace agreement being put in place? Are we moving towards or away from energy flows normalizing? They're the key questions that we need to answer, really, in trying to formulate a view as to where things are going. Let's be completely honest. If an Iranian official or a US official tries to do a victory lap in the media, it's for domestic consumption. It's not going to move the needle particularly much.
No, absolutely that. And I think this is, think of it in terms of like a chart. Think of it in terms of like an asset chart. Things very rarely go in like a perfect straight line. We will have pullbacks.
Absolutely.
And again, it is the direction of travel, as Michael rightly says. And on that, again, as Michael says, there's a lot of people out there looking for hot takes to get engagement and whatnot. But there's also a lot of people out there with books to talk. Okay, so we're talking about Arnold and anyone speaking with absolute certainty in this point of time. Give them a wide berth. Just like I'm sure the people that follow us or listen to us must follow these people anyway. But I'd say if I had to pick 3 people that to follow that would give quite a grounded kind of picture on what's going on. One is Rory Johnston, a fantastic follow for energy. The other one is Stephen Stapinski. I'm obviously going to butcher that, but Bloomberg.
No, I knew who you were going to say it. I was like, I don't know if he's going to manage this. I'm not sure how he's going to get on.
I'm sure it's Stapinski. But anyway, Stephen Stapinski's Bloomberg.
Fellow with a long name at Bloomberg.
Yeah, he's fucking fantastic for putting in like Simpsons memes into his charts. And also Chai Girl. Very much all very grounded. And I think Tracy's actually listening. So I'm not just saying that because she's listening, but more But no, that's who you need to be surrounding yourself by. You need to be surrounding yourself by people that are very grounded. There's a lot of people out there as well that are very much the same and experts in the field. There's a guy called Ed Finn that specializes in Twitter. In fucking shipping. I don't know why I said Twitter there. But yeah, anyone that's only putting out the same things day in, day out, regardless of what the news is coming in, best avoid. Again, as Rory said this morning, the only thing that matters now is are ships actually going to transit the strait. Now, don't look at Marine Tracker for that because they turn off their Clive, because they turn off their traffic beacons and whatnot. But we will know over the next couple of days, because there's a lot of people now on the strait, including analyst number 3. Well, not anymore, but he was there. Actually counting these ships. So it does.
Also, just on that, in terms of, because I can almost guarantee this is going to happen. We're going to have a headline at some point later on today, probably early afternoon, that says something along the lines of, one man and his dog have crossed the Strait of Hormuz today. It's not going to be an immediate thing where there's a ceasefire agreed and you're the captain of a ship and you go, right, lads, we're off. There is paperwork to be done. There are arrangements to be put in place, whether it be insurance, tolls, etc. Give it a few days to work out what's really going on.
Also, it's going to be very much like wildebeest sitting at the end of the Masai River. Like everyone's going to be waiting to be the first that goes while the crocodiles are just waiting for them.
Exactly that.
I do think once we get one go through, then we'll see a lot more. But also on this, not all vessels are created equal. For instance, smaller fuel products vessels that are going like between Gulf states, so what? What we want to see is laden tankers going west to east and unladen tankers going east to west. If I've got that,
Yes, you have.
Yes,
I was so expecting you to get that wrong. I was almost surprised that you managed to hit the nail on the head.
I was using my hands to work out what was going on. But
yeah, that doesn't surprise me.
Go on.
But yeah, I mean, well, I was going to say we've managed to get 16 minutes into this without actually saying what's happened overnight. I'm kind of taking it as read that people have watched a program called The News this morning. But if you haven't, of course, President Trump did announce late last night, it was around about 11:30 here in London, so about 90 minutes before this deadline was due to expire, he announced that the US has agreed to suspend the bombing and attack of Iran for a period of 2 weeks in what he called a double-sided ceasefire that is contingent on the Strait of Hormuz safely reopening. Bear in mind that every ceasefire is double-sided, kind of by definition, but there we go, whatever. Trump was also... Sorry?
Can we call them double-ended ceasefires?
I'd rather we didn't. Trump was also saying that the US have received a 10-point proposal from Iran that will form the basis of peace negotiations. The first of these talks is due to be held in Islamabad in Pakistan on Friday. There's also some talk that the negotiations that are taking place on Friday could be extended with the agreement of both sides. Of course, it was the Trump Truth Social post that really drove the initial market reaction. We then had confirmation that the Iranians had accepted that very shortly after. The one, and again, there's like plenty of colour stories out there in terms of how this was all negotiated behind closed doors, which you can go and read if you're interested. The one sort of interesting nugget around all of this is reporting that Iran and Oman will reportedly be permitted to charge tolls for the passage through the Strait of Hormuz as part of this ceasefire agreement. I must admit, that's a bit of a boon for Oman. They don't really seem to have actually done anything, and they're going to get a massive windfall here potentially. But that is something worth keeping an eye on, certainly in terms of whether that is a topic that is potentially negotiated as part of these talks that are going to be taking place on Friday. But as we said, that is obviously a clear positive. It is clearly allowing the market to breathe a massive sigh of relief this morning, as you see from those moves. But there's still plenty of questions. Does it hold? How long does it take for energy flows to normalize? Well, also on the energy subject, you've still got all this infrastructure damage that's got to be fixed at some point. So, as we said, we're kind of not out of the woods yet.
Just on this, so like Maersk themselves have already come out and said, look, this 2-week ceasefire could open a window for ships to transit the Strait of Hormuz. Yeah, there's still some people out there, like rightly so, saying, look, people might still be sitting there waiting because they want to just see that this is legit. But I think if we zoom out, and we always do extol the virtues on this show, zooming out, because it's very easy to get a bit blinkered on a subject or on a move or whatever. One key thing that I'm taking away from this is not just that Trump is willing to tackle again, but more than ever seems to be willing to build his own off-ramps.
Yes.
And I think the market is now going to be very savvy to this, to the extent where, before we went through a period where good news wasn't really putting that much of a bid into markets, but bad news was certainly slapping them. I think we could begin, maybe, lots of caveats here, to see the opposite take effect, where people now starting to go, actually, do you know what? Trump really has no bollocks. Why are we going to tank the stock market? Why are we going to kind of price in?
Almost a boy who cried wolf kind of.
Yeah, if Trump's never going to follow through, so we might actually see markets kind of start flipping on how they've been reacting. But again, it's all about the reaction function to headlines and news. Trying to predict the next headline. Good luck to you. Don't bother doing that. Yeah, but it's a very interesting time to be in markets, that's for sure.
Well, that's the understatement of the week, Ryan. But yeah, you are correct. So I think, just in terms of to kind of wrap this up and look forward, I think, the key things to focus on, as we kind of already discussed, but just to really emphasize and drill the point home, firstly is, does the ceasefire hold? they've agreed that it's going to be for 2 weeks. Is that the case? Is it not the case? No one knows. Anyone telling you with certainty that they know on that front is talking complete and utter nonsense. But we will need to see evidence that the fighting has come to an end. Similarly, the market will be wanting evidence that peace talks are progressing and that they are taking further steps towards a more durable de-escalation. And then, of course, you've got the issue of flows through the Strait of Hormuz as well. So I think they're probably going to be the three main things that market participants kind of focus on over the next, 24, 48 hours, if not slightly longer. As we kind of said earlier on, anything else just feels like noise other than headlines that relate to those three specific topics.
Yeah, no, exactly that, my friend, exactly that. Apart from the Middle East, what else have we got to keep an eye on?
Yeah, exactly. Well, I mean, it kind of goes without saying at this point that geopolitical events are going to be the main kind of driver of price action. The one other thing to bear in mind in terms of the Middle East is that UK Prime Minister Keir Starmer is heading to the Middle East today, according to reports in Politico. Just when you thought the people of the Middle East had already suffered enough, he goes out there. That's the absolute last thing anyone needs at the moment. If anyone in the Middle East wants to keep him, by the way, you are more than fucking welcome. Please, I'll pay a night in a hotel for him.
Tell you what,
60 million Brits who will do the same.
We'll have a whip round and we'll book a flight for Rachel Reeves and you can have her as a bonus.
Yes, exactly. Just take the whole cabinet, actually. Yeah, why
please. Not? Take my wife.
Oh dear. Anyway, in terms of the calendar today, thankfully, there's not actually that much on it because I think market participants are going to have more than enough to focus on anyway. At 10 o'clock this morning, we get the latest PPI and retail sales figures from the Eurozone. This data is for February, so it is, of course, very, very stale at this point, and it's not going to be particularly instructive in terms of what the ECB may be doing next. Then moving into the US session, there's no real notable data releases. We do, though, get a 10-year Treasury auction at 6 o'clock this evening. The 3-year sale that we had yesterday stopped through by 1.2 basis points, and that's pretty solid after the 3 straight tails that we had in the last week of chunky Treasury supply. Obviously, you've also had a big rally across the curve since that 3-year sale, so the 10-year auction should go relatively well later on. And then at 7 o'clock this evening, we have the release of minutes from the March FOMC meeting. I mean, let's be honest, the minutes are stale at the best of times. They were already going to be stale. Now we've got a ceasefire in place. They're even more stale. So I don't think those minutes are going to provide anything by way of policy signal.
That's a very valid point. It's like things are now so messy that it's almost going to be like COVID, right? Where we kind of just ignored data for a few months, 6 months, 12 months.
And actually that... I don't want to call this right now because obviously we don't know what's going to happen with energy prices. But if we were to now see a sustained move lower in crude and in natural gas prices, then that is also going to apply to things like inflation. Because, effectively, you'll be looking at a CPI number and going, okay, great. Well, inflation was very, very high in X month, maybe March or April. But since then, crude's down 20%, nat gas is down 30%. These are random numbers, by the way. Don't hold me to it. The data doesn't tell us anything. The world has moved on. So I think the COVID parallel is a very, very good one to draw there, actually. The only other thing of note on the data docket today is on the earnings front. Earnings season gets underway next week, actually, on Monday with Goldman Sachs due to report. But before the open today, we are due to hear from Delta Airlines. Now, the reason why I flag this is because, of course, airlines have been massively exposed to travel disruptions, but also to the surge that we've seen in crude prices and, as a result, jet fuel prices. So it will be interesting to see the guidance that Delta issue around that. Although, again, I will caveat that by saying they probably came up with that guidance before news of a ceasefire broke. So a little bit of a pinch of salt is probably required on that front. And again, goes without saying, geopolitics very much going to be the main focus for markets as we move through the next 24 hours or so.
Yeah, absolutely that. I do think the more I think about the so let me use my words. The parallel is probably it's more apt than anything else, because even to the extent where even if things are, switched back on tomorrow, it's going to be a long time before things get back to normal. Like we saw with COVID, when people were allowed out their houses again, it took a long time. We had bullwhip effects in supply chains, etc.
I think the one and it is a significant difference that is worth flagging, which actually means that you could potentially be looking at disruptions from this for slightly longer, is that COVID was very much a demand shock, i.e. people locked down, they can't go out, they can't spend, blah, blah, blah. Whereas this is actually a supply shock in terms of the blockage of the Strait of Hormuz and the damage to energy infrastructure. So that actually could cause some longer lasting effect. But again, these are very much kind of questions for another day in the future. The market's not addressing them now. We will have to at some point, but that point is not today.
And also, just to note, someone in the comments on the live chat saying, you forgot oil prices don't come down as fast as they rise. No, we haven't forgot that. We actually specifically said that even if things went back to normal tomorrow, energy is going to be so backlogged and you can't turn production on. So we've actually said the opposite of what would be.
Well, actually, yeah, and not only that, but also the other thing to bear in mind is, and I don't really want to go into a lecture on like how prices are made up, but you think about what's actually in the oil price. You've got demand clearly and supply dynamics. You've also got a geopolitical risk premium, which is going to be higher post-conflict than it was pre-conflict. And the other thing that may potentially have to be now incorporated into the price is higher insurance costs in terms of shipping, but also if there is going to be a toll on the Strait of Hormuz, then that's going to have to be put into the price as well. Even if it is only, $2 or $3 a barrel, that's another kind of upwards catalyst. So I don't think anyone is Kevin Hassett probably is at the White House saying that we're going to get back to pre-conflict levels tomorrow. No sane person is saying that. And actually the other thing I would just flag on this is in the US particularly, by and large, this is back of the envelope maths, but for the most part, if you look at the increased spending from consumers on gasoline that will come as a result of this move higher in oil prices, it will largely be netted off by the tax refunds that they will receive under the One Big Beautiful Bill Act. So providing we do see prices come lower, the impact on consumer spending may not be as severe as you might expect.
Exactly that, my friend, exactly that. And one upside again to things potentially normalizing in terms of headline risk for now, he says, touch wood, fingers crossed, is we can actually go back to talking about non-Middle East things during the shows, because we do appreciate that that's all the show's been about for the last 4 weeks. But unfortunately, that's the thing that's moving markets the most, and that's where we got to pivot to.
Indeed, yeah. And, a bit like when we spent every day talking about the UK. But I agree. And I think, everyone hopes that this is a durable, or the start of a durable end to hostilities in the Middle East. And hopefully we can start talking about some other stuff, because there is plenty else going on that we do actually need to talk about at some point.
Exactly that. Exactly. Yeah. Amen to that, my brother. But on that note, Michael, pleasure as always, my dear friend. Listeners, we hope you've added a bit of value to your day and put a smile on your face. Whatever you're doing, keep it tight, stay safe, follow the headlines on PIQ, and we'll see you all tomorrow.